every 12.7% of the life of Bitcoin, the price doubles. Let's put Bitcoin now together with it. Notice, by the way, how this line, which had a pretty decent slope, becomes almost flat. We got 3 months. If it happens, in my opinion, I don't see any reason why the data would change this. We have 3 to 4 months where we go into FOMO silly season territory. Past is not always prologue, but assuming this little band of rainbow, assuming the end of 2025, I would say my target is...
Guys, welcome back to another show. Today, I'm here with Bitcoiner and founder of the amazing podcast at One Base Money, Matthew. How are you doing today?
Maurizio, nice to see you. Nice to meet you. Thanks a lot for having me on. Doing well.
It's a pleasure. We had a fantastic chat off camera, so I'm looking forward to pick your brain and see all this beautiful data that you put together for us. So really appreciate it. Thank you so much. But before we dive into it, do you mind to give us an intro and tell us a little bit about yourself?
Sure. Yeah. So my handle is at One Base Money. I discovered Bitcoin in the early days, fairly early days for a non-coder, I'd say, which was mid-2011. Was not, unfortunately, buying at that time. Those were single-digit Bitcoin prices. You had to send your money to Japan at that point. Mostly, not always. There was Bitstamp actually was getting their start in Europe in 2011, but it was too much for me. I usually like to take a flyer on risky investments, but I just couldn't wrap my head around it. So it actually took a couple of years. Paid more attention in the bull market of 2013. That really tuned my interest back to Bitcoin. So I've been involved for a while, but before I sort of delved more into Bitcoin and trying to spread information about it, was involved and interested in a lot of European libertarian things. So, just going to conferences, meeting people, giving presentations, the typical thing that a libertarian does or did back in those days. Talk about the money supply, talk about inflation, try to figure out why there's this cluster of errors in the economy all at once. Typically, if businessmen are so smart, businessmen and businesswomen, why is it that we have these booms and busts all at one time? And so I think the Austrian school with the business cycle theory is still one of the best ways to explain that. Although I have plenty of disagreements with a lot of Austrians on their sort of gospel interpretations of banking in particular. But that's a topic maybe we can delve into. But the thing that we all agree on, which is really cool, is Bitcoin. And Bitcoin solves a lot of issues. And so I've basically tried to meld a lot of those ideas together with my website, with my podcast, started the Crypto Voices podcast in 2017, talked to a lot of economists about the money supply and whatnot. And then for a couple of years now, I have a YouTube channel as well. It's called Porkopolis Economics. Everything you can find with my stuff is the handle at One Base Money. But pretty much daily streams now there on Twitter and on YouTube and on Twitch. Although it's a bit schizophrenic there for me. I haven't really developed much of a following there. About the economy, about the money supply, about stocks, bonds, and of course, Bitcoin. So I'm just trying to put a framework of where I see Bitcoin in the economy. I think it's pretty grounded. If I do say so myself, I have a lot of people that enjoy the work. I try not to put too many Pollyannish ideas out there, like Bitcoin is going to save the world tomorrow. Obviously, I think everybody should be grounded there. And I think that's actually an opportunity for people that want to get into Bitcoin, that have no idea about Bitcoin. For younger people, we're still very, very early in the overall adoption of Bitcoin. And so, I think that's there. And I guess one other thing I can say, perhaps some of your listeners have heard about the power curve or the power regression or the power law that Bitcoin seems to be following. I know you've talked to Plan C and Cena and those guys from Bitcoin Intelligence who are very good. I like working with those guys as well. I guess I was the second person to discover that Bitcoin was kind of following this power curve. Not that it's a big deal. For me, it was just literally plotting something on Microsoft Excel. Giovanni, perhaps people know Giovanni. He's on Twitter, tweets a lot about that. He did that. He put Bitcoin's price in power on a log regression in 2018, I think September, on Reddit. And I put it in December on Twitter. So we kind of independently discovered it there, which was interesting. But so there's a variety of different metrics and sort of ideas and benchmarks that I try to wrap my understanding of Bitcoin around to kind of ground us in some, into some reality, and then see where that can take us. And hopefully the goal is just to get people sort of more comfortable with it and for free. Another thing I guess I can say, is I try, I cut my teeth during the global financial crisis. That was when I came out of university. Exactly like I said, learn about the Austrian school, learn about free market economics, learn about how the state intervenes and causes more distortions in the market. I also read a lot of newsletters, and there is some good information in newsletters. I had a finance and economics background from university, but there's also a lot of fluff in newsletters. There's a lot of hopium. There's a lot of distortion even in newsletters. People that kind of are just this, either you're a perma bear like Peter Schiff, or you're a perma bull, like some talking heads on CNBC or whatever. I mean, everybody gets tired of these types eventually, but it's a lot of grift. It's a lot of grift in the space. Everybody's got to grift at some point. You got to make money. You got to feed your family. I try to get through that, and I think I'm succeeding now because we have this beautiful thing called Bitcoin. You can donate to me if value for value if you like my work. I got a BTC Pay server, my link on my website and on Twitter and everything, and that's all you have to do. So I don't have subscriptions. I know that's fine for some people, but this is sort of I'm kind of the newsletter guy. That's what I'm trying to become. If you like that, then please follow. I'd be happy to share some comments and thoughts with you on my streams.
Fantastic, and I'm so happy you are with us because I love your content. As always, guys, in the description you will find every single link, so make sure to give Matthew a follow if you haven't. And it's funny you mention all these people. I mean, Giovanni, we had a podcast, I think it was 3 weeks ago, and he gave me this power law lesson, literally like a lecture on the power law, which is super interesting. And like you mentioned, Plan C and Cena, we do a monthly call on the data. And of course, I mean, it's interesting whenever I talk to someone like you, super well educated, grounded in math, and with a beautiful background in Bitcoin. It's easy to ping pong into what is money, how does it work, but many of our followers, our viewers, they actually think money is fiat, right? And they think money is in the bank, and they think the bank has the money. Whether we say all the time the 3 famous rules of 1 is not money, 2 is not in the banks, and 3 is not yours. And how do you think we got there? I mean, why the financial system is so broken?
Well, it's a great question. People have been trying to figure out for a long time. I'm going to immediately jump to where I'm hedging a little bit your statement, even though I'm very sympathetic to it. I like Friedrich Hayek's statement about money. He said, let's define money more as an adjective, not as a noun. So we have something like moneyness. What is something more like money, or the true idea of what money is? And then what is something that sort of seems like money, but in reality, you could get rugged. These are sort of my paraphrasing of what he says. And this goes across the gambit. I mean, you don't have to think about fractional reserve banking or whatever. I mean, money could be gift cards. In Canada, the old days in Canada, there was this Canadian tire company. They used to have their gift cards literally looked like Canadian dollars, but they were actually the logo of their company. And they started to trade like cash for a while. You could trade them at grocery stores and all the rest. And it's just, again, I'm not saying everything is a scam. There's that sort of line, right, that everything is a scam in Bitcoin. I get it. I'm very sympathetic to it. It's just the system has tended to scale with an assets and liabilities framework since the medieval times in Italy. As you well know, double entry accounting started in with the merchants of Venice. Money, if you want to strictly define it in an economic term, is a generally accepted medium of exchange. That's the X factor of money, a generally accepted medium of exchange. These other 2 factors that are used commonly in the parlance and economic textbooks would be it's a unit of account and a store of value. But those actually still, I would contend, they're not the X factor. The X factor is money. As you know, though, as you said, and George Selgin, who's an economist that I really appreciate his work, his monetary history. If people haven't heard of him, I recommend reading a lot of his work. George Selgin, he said, he was actually our first guest on our podcast back in 2017. And he said, fiat currencies, they are stores of value. They're just not necessarily very good. And I think that's unfortunately the reality that we're in. The other key component of all of this is that money has become monopolized by the state. And so that's what Bitcoin is trying to break. Standard definition of monopoly, the Adam Smith definition of monopoly would be, doesn't mean a big company or some company that's apparently so good that they give us all the goods and services that we want, but then they jack up their prices later. Like that's the cartoon version of monopoly. A monopoly is just a firm that has a special privilege from the government. So that's what a monopoly is. And in today's monetary world, that is the central bank. It is literally a bank that has a special privilege from the government. So that's where you need to watch out. That's where the distortions can come from. It's not completely inept at doing its job, let's say. It does. There are functions of money that can go through the system. But I would contend, of course, as many people in Bitcoin would, that it's very bad. It's very distorted. Pricing gets distorted. Interest rates gets distorted. And it's primarily because of the monopoly. So that would be my long and short answer to your question is we don't have a freely competing system. Another thing that I really like about George Selgin's scholarship and Larry White, we've had him on our show as well, is you can find around the world pockets of free systems. Even in the medieval times in Italy, these were just city-state currencies, but also in Sweden, in Canada, in Scotland in particular, in the West. There were places even in China and South America, but sort of the standard sort of flagship free societies, free banking societies were those that I just mentioned in the 1700s, 1800s. Even Canada didn't get a central bank until the 1930s. But these were basically economies that operated under a gold standard, some sort of a gold-backed currency, but they had no central bank. There were banks that were competing freely. They would issue their own notes, deposits, certificates, and they generally worked. And you actually found, interestingly, that the specie, or the gold in the vault, was not as high as what a lot of the Austrians like to say. It was not. It was never 100%. It wasn't even 10%. At times, it could be down to 1 or 2% that was backing the deposits. So those are interesting tidbits of history. I just say that, again, trying to put some balance to the situation. You never quite know how this stuff's going to work out. But again, to cut through a lot of the history and the information that I've just sort of given, I think the current system, way consolidated, not decentralized, to use a Bitcoin term, way politically influenced, and simply not nearly as free as it needs to be. It's free in some ways, in some situations, but it's just way, way monopolized. And so Bitcoin can break that, because with Bitcoin, you can absolutely, as long as you have your coins and you verify them on your own node, you can verify any transaction. No one can stop you from sending or receiving. You can't do that on even like these sort of progressive apps like TransferWise. They will sometimes do a KYC on you to receive money, not even to spend your own money or deposit your own money, but to receive money. So it's unbelievable the way the system has gone, and clearly not the way that a free banking system needs to work, to go. So I think Bitcoin can break a lot of these things simply because once you withdraw from the system, you have an infinite amount of freedom.
And it's fascinating how the majority of the people, unless they start their own journey into the rabbit hole, they have no idea how it works. Like myself included, I had no idea. I thought money was currency in the bank, right? That was how I was brought up. Like that was normal for me. When the pandemic happened, didn't they print 60% of the entire monetary supply in the span of a few years, which is complete nuts? And then you follow certain channels. Oh no, CPI. I call it CPI, by the way, because they show you. Oh no,
I like it.
They decide what to include and what not. Certain things they can be, certain things they cannot be in there. If you compare the US dollar with the Turkish lira, of course, the dollar is doing amazing. Yeah, they had 80% inflation, of course. But if you compare the dollar with Bitcoin, well, then it's a different story, right?
Exactly. And CPI is a very good way to say it, I would say. It's just simply, I have said for years, and I haven't gone there yet. Maybe I will, but I've said I'm pretty much going to keep all CPI, government-run pricing statistics off of my website. Like I try to do economics. Let's put things into stocks and flows and understand. But I don't see a need to do that with CPI. I'd much rather look at the Bitcoin price or the gold price or the oil price. I'd rather look at money supplies. Those are actually corporeal, real things that we can measure, and then go from there. So that's my view.
I grew up in Italy with the Italian lira, right? And now we are into a place where go to the grocery and do some shopping, man. You don't even read anything. Like you said, don't trust anything. Just go and do some shopping. Buy whatever, It's just like, it's nuts how much they managed to inflate the whole thing. And I know you have some interesting charts. I know you have a passion for tracking how much money they are printing, right? Which I love.
I do. Yeah, I think it's interesting. So this is kind of the flagship piece of research that I've been doing for about 6 years now. Actually 7. This is the 7th year. I'm completing 7 years as we speak of this research. So this is when you're talking about currency, when you're talking about the core of the system, central bank money, I was always trying to think of something that was most comparable with Bitcoin. And we asked economists this on our podcast when we started in 2017. Myself and my old co-host Fernando Ulrich, who's is a very good free market economist in Brazil. We kept coming back to the idea that it was the monetary base was the most. If you talk about what is comparable to the eventual coin supply of 21 million Bitcoins or the UTXO set of however many, I think it's maybe 100 million now, the UTXO set on Bitcoin, how many pieces of Bitcoins are all outstanding. You need to put that in the proper bucket of economic data. The solution here was the world monetary base. So just what you said about during the pandemic, how much did they print? I can just show you right here. If you look at the world, actually, let's just take all these off to make it very simple. Okay, so here's the world total central bank money in dollar terms. In December 2019, there was $20.8 trillion worth of central bank money. And by the end of COVID, the main part of COVID, all the stimulus, it went to 30 trillion, 30.36. Yeah, so that was actually, to use your number, it was a 50%. It was a 50% increase in the stock of money in the course of 1 or 2 years. And I would contend that this is, and I still contend to this day, this is the apples to apples money supply of Bitcoin, like in the fiat world, because this is what the central banks, if you want to, if you think of terms of balance sheets, this is basically the main liability on the central bank's balance sheet. This is how many currency units they issue. People often have no idea where that is, what it means. Is the printing press even a real thing? Yes, it is. It's recorded every month, sometimes every week, sometimes every day on central banks' balance sheets, and they publish this. It's all available on their websites. But there's no APIs, I'll tell you. You can't find this on TradingView. You have to actually go and do the work. So I do have this. It's a set that I'm sort of proud of, compiling now. This is where it is. And you can actually see it's down about 20% in the last 4 years. Okay, so the peak was December 2021, right, $30.44 trillion. And now it's down to about $26.2 trillion as of March. I update this every quarter, so I'm about to start the quarterly update for year end. So it's a little bit of a lagging indicator, but it's going to brass tacks show you, the arena of where we are. And then if you're curious, how the currencies break down, so we have the dollar. It's, might be smaller than you think. There's only 5.8 trillion dollar units. And a trillion's a lot, by the way, but still. I know people like to think of in terms of hundreds of trillions or quadrillions of dollars, but those are other things. Those are other claims, other ideas. As far as just the base money, what the central bank prints, it's this. We also have the euro. That's the next up. It rounds to about $5 trillion equivalent. Okay, but it's in euros. I'm just showing you the dollar value. Japanese yen is 4.36. Chinese yuan is a big one. They're at 5.2. So at the moment, they're number 2. Formerly, Great British Pound Sterling, that's $1 trillion. It's a little less than $1 trillion sterling. I think it's 900 billion sterling. And that's the top 5 currencies. So they make up, as you see here with this line, they make 80% of the global monetary base, of the global money supply. And the next 45 currencies in my set, I don't have every currency in the world, but it's like 96% of GDP is here. And that makes another 20%, basically. So that's another $4.8 trillion. That's the core of the system. So in my mind, in my view, and how I've always tried to just explain this to people is, you can get caught up in the hype of Bitcoin. It's great. Do it. But also understand these people have a lot of influence, a lot of money. Central bankers have a lot of power. They literally create their own money. So, they're going to work to preserve what they have. You might as well track what they have and see. That's what I do here.
I love this. Thank you so much for putting this work together. And this is how rich people get rich, right? They buy assets. And this is why real estate has gone bananas, possibly, because after all that printing, well, then what is valuable? Well, definitely not money. So you have to go into assets, right? You have to defend yourself and protect yourself into things they cannot be inflated or printed. And
precisely.
Fascinating how, of course, the dollar is driving kind of the printer press because it's the world reserve currency. So for now, whenever they turn the press on, which I don't know if you agree, but I'm expecting in September things to shift a little bit because now they've been suppressing it for way too long. And this is where, again, another wave of money is going to come into the market. Hence, you want to protect yourself, right, by owning perhaps, it doesn't have to be the answer for everybody, but it's definitely our answer, something like Bitcoin, which cannot be inflated.
I am 99% confident that will be, as you say, and they will print in the fall. If you look at just this total amount, all right. So again, it was 20 trillion before COVID, 30 trillion after COVID, and then you pull it forward. I can show you this chart here. So this is the same chart. It's just as one unit, and then we're putting the overall trend line. So first of all, this is log scale, log base 10. So every level up higher is 10 in order of magnitude of 10. Clearly, this is important for the power curve as well for what Bitcoin does. But money is on an exponential, just like stocks, bonds, population worldwide, they run on an exponential curve. So we can draw a trend line right there, and then we can see this is by the way a 99% R squared, which means basically it's 99% better than the average. So it's a great trend line. It's a great fit. It's clearly an exponential growth. But if you notice here, with all the pullback that they did, as you say, the suppression, they're used to not suppressing the money supply. We're way low, way low. And in fact, if you draw percentiles, we're under the 2.5 percentile. So we're in extremely, relative to the trend, we're at extremely low levels of money print. This is why Trump is so mad. This is why he wants them to print more. Again, you don't even have to look at interest rates to understand this. This is, a rising interest rates means a lowering of this money supply, and falling interest rates means a rising of this money supply. That's literally the mechanics of how they do it. So we're super tight right now, super low on the central bank money supply relative to the trend. This is an enormously strong trend. Like, this is, again, where you can say anything you want about Bitcoin going to 1 million or 100 million in a day, a week, a month, a decade. That's fine. But here we are in 2025. Let's analyze the situation. We're actually in a I think Bitcoin looks even better at this point, because this trend is not like, this is not going to go linear, or they're not just going to make this flat. They're not going to become sound monetary theoreticians at the central banks. All that they do is know how to bail out their buddies. So they're going to print more. You can say that the central bank is independent. It's not. Obviously, central bankers usually help their presidents that are in power in their, adjacent office building, wherever it might be, depending on the country. So they're very much going to help Trump, I believe. And he's going to want strong economy numbers for his reelection, or his Republican, party's reelection campaign next year. Not saying that the U.S. drives everything for sure, but this is the global level, and it's extremely low. So the point is, in terms of purchasing power preservation, in terms of Bitcoin being a great hedge against all that, it's absolutely going to be the case, simply because this is an unsustainably low level of money on this trend line compared to how central banks typically operate.
I completely agree with you, by the way. And if you put everything together, usually the last part of the year, Q4, is the bullish part for Bitcoin anyway. You have October, November, December. Those months are generally bullish. You have Bitcoin chilling at 108,000, and nobody cares, by the way. And like you're pointing out here, they're about to turn on the printer. So, oh boy, embrace for impact, because I think Bitcoin is going to go nuts. Maybe it's going to be boring through summer. People are going on holiday, and who cares? People won't trade it. It's going to be maybe sideways, maybe even potentially retest the 90K. Who cares? But at some point in September, I think we'll see maybe the final leg of this bull market. I wanted to ask you how you feel about it, because some people are saying we are going to respect the 4-year cycle. Some other people are saying the 4-year cycles are broken. But I have a feeling that we have to see and experience, like you're pointing out here, at least another leg up.
No, I completely agree. I think that the 4-year cycle is mostly intact. It's inevitable, as Bitcoin stabilizes and becomes more adopted, this volatility will go down, right? So we might not have these, depending on which year we're talking about, the pump could have been 10, 15, 20x, or it could have been, 4 or 5x, right? Perhaps the last cycle would be an example of that, from where it was like a year before. So clearly it goes down, but we still have some every year still on the downside after the cycle, after the hopium, the FOMO, you get the grifters, the Terra Lunas, the Celsius, the FTXs. It's been a pretty consistent down draw of 70 to 80%, right? Depending on the cycle. Primarily based on the down draw, I actually think that we're intact. Until, I'm not actually as concerned about what happens on the upside. I think the pendulum swing, right? But since we had such a significant down draw, and I can show you here, this is the top 10 percentiles on my model. It's a little bit different than Cena's and Plan C's, but let's just take some things off here. This is different than what I just showed you with the money supply. It clearly grows in a straight line on log scale. With Bitcoin, we have this nice concave down, curved, sort of slowly asymptotic. It means the growth is slowly declining as it increases, day by day, year by year. It gets a little bit heavier and the volatility gets worse. But in my opinion, since we had such huge down draws here, all right, so like, from, this is daily close, but, we did hit 1,1300 depending on the exchange here, down to 200, all right, with the 2013 boom. Same exact thing with the 2017 boom, 20,000 down to, nearly 2,000. We nearly went 90% here in 2017. Then we had this double top in 2021, but you're at 60, and then you go all the way down to 16. You're plus 70% in each one of those down draws. I'm not going to invalidate anything until we see what happens during this next leg up and this next leg down. But I can totally see, and this might even happen at the presidential level. I mean, this is not something, look, I generally think it's okay that, the U.S. administration is so favorable towards Bitcoin, but again, trying to temper people's expectations. I'm hearing a little bit of rumors that maybe the people are a little bit cooler now to doing a strategic Bitcoin reserve. Obviously Bitcoin is competitive to the dollar in totality. We also have a lot of grifting from the Trump administration and, their family and friends, obviously, and the whole worldwide political establishment is grifting towards Trump right now, or Trump is grifting towards them, I should say. But specifically with Bitcoin and and Ethereum, his World Liberty Financial, you never know what could happen with there. I'm not predicting that something bad happens, but I'm saying every time we've had like a hopium stage, a FOMO stage, when the tide goes out on the next leg down, all the scams are exposed. One could easily imagine that the scams could be exposed, whether in reality or a little bit of political lynching, as they like to do if the Democrats come in, say, in the midterms. Again, I'm not saying the U.S. runs the world here with everything, but it obviously influences a lot. Who knows? Maybe there's a lot of politically connected Republican-type crypto companies that are scamming people. I mean, there's an infinite number of possibilities about how scams could work now in the Bitcoin space, the crypto space, that might even be more politically connected than they've ever been. I think that's a very real possibility. So again, I think it's a very real possibility that you have, since we had, a 70% plus drop in 2022, come back. Might take a little bit longer. As you see here, we've been, swimming along the power curve for over a year now, about a year and a half, since the ETFs were approved in start of 2024. I do think that pendulum will swing. We get some FOMO. And then this is a very new asset. There's a lot of grifters. Totally possible that we have another 60, 70% drawdown. So in my mind, in my opinion, looking at this, just simply the situation here, I see a total possibility that we repeat the exact same 4-year cycles, big upside, and then huge puking on the downside when all the grifters are exposed in this run. And it might even be like presidential administration types, which would be even more.
Yeah, 100%. I completely agree. And also it depends, like you said, it depends on how high and fast we go. I'm actually interested in the bottoms as opposed to the tops because I don't trade this thing. I actually have everything I have is in Bitcoin. I don't sell and rebuy. I just hold for the long time frame, right? So I'm interested in the bottoms. And I think there is something in that ETF approval January last year, which is $50,000-$60,000. That could be the next bottom, right? Perhaps, but it depends on how high we go. And I also believe, like you, that we will see a correction. How much it's going to be, I don't have a crystal ball, but this thing will correct, I believe. Depending on how we go from now until the end of the year, right? Because if we just grow steady and slowly, maybe it will be a different beast. And like you said so well, now the asset is going from a teenager to a young man, right? It's maturing, which means the volatility is supposed to be less. I mean, still swings maybe 30, 40%, but it's not 90 as we've seen in
Y-
2011, 2013, right?
Yeah, but it remains to be seen there. I'd say it remains to be seen. And another thing I wanted to point out is we just had the money supply discussion, right? So we talked about the base money, we talked about the growth of base money. I am still of the opinion, and I may be a minority in the power curve or the power regression or power law crew. I think that this is overwhelmingly strong as far as Bitcoin's dynamics, the actual growth of the network. And we can talk about more what this means. I know you talked about it with Giovanni, and I know your audience knows a little bit about this. But in my mind, the power curve represents adoption of Bitcoin, and it's the clearest signal, particularly when you look at price, of the adoption of Bitcoin. Actually, more than Reddit posts or Twitter posts or any exchange accounts, all of these, or ETFs, money in ETFs. All of these things are important. Like you said, they do represent a maturing of Bitcoin. But I'm just talking about the momentum, the main strength, like sort of it's a chicken and an egg thing, but it's basically what does price describe? It's adoption, okay, but how can we look at how adoption grows? Well, it's price.
Yeah.
That's my explanation. And I think that since the power curve is such an amazing representation of that, which is here, is 96% R squared, an amazing fit. I've been following this since 2018, Bitcoin operating on a power curve or a power law. It hasn't broken. In fact, the curve from 2016, if you look at the data of, and I need to pull up this chart, but basically, if you look at this curve as it was drawn and you stop calculating the data here in December 2016, and then you just extend it out as you can do with regressions, it would look nearly identical to the all-time curve, which is here, which takes all 15 years of pricing data, 16 years of Bitcoin data. That tells me that this is a network growing, it's being adopted, and you can visualize this with the price. And I think it's a way stronger phenomenon of what Bitcoin is doing than even looking at, say, this, which is a tailwind, by the way, and we know it's going to be a tailwind when they start ripping out the printing presses, which we know we know they're going to do it at some point. Like you said, maybe it happens at the end of this year. My point is, Bitcoin's actual momentum, movement, the price, everything, I'd say it's 90% plus, maybe even 95% plus correlated to the underlying network fundamentals, adoption, just people, just the natural way of Bitcoin growing. It's 95% correlated to this, to itself, to its own trend, rather than even whatever the Fed's doing, whatever Donald Trump says, whatever central banks do. That's a nuanced point, because I talk about it a lot. I've also talked about money supply for the same amount of times as the power curve, 7 years. But I think it's 95% power curve, 5% money, as sort of a broader picture of what Bitcoin's competing against at this moment, if that makes sense.
Yeah, it does. I completely agree, by the way. So many people are attributing this pump to Trump. And if Kamala would have won, I don't think it matters. Bitcoin is doing Bitcoin things. And if you talk about 10, 20, 50 years time frame, who cares which president has won? Of course, there's going to be a short-term impact on the price, right? Because if there is a pro-crypto president like Trump, of course, the market is going to rally. And if Kamala would have won, by the way, we don't know. We are only trying to make sense of this conversation, but it's all hypothesis, right? We don't know. But I agree with you. I don't think it matters. I don't care, actually. If you look back in time, even COVID, when we dropped to, I think it was $3,000 or somewhere in the region, right? We are 100,000 now. Who cares? You can try to explain it rationally, or like you said so well, if you do math, if you actually apply math and, show me the chart, I'll tell you the news kind of thing. It makes a lot of sense. Do you use the power curve to kind of figure out a number, a target, or you just like me, you don't care and you honey badger into it?
No, I got a target. So we can talk about it. So here I'm bringing in another chart. It's the same chart, but it's different bands. This is kind of the way I do it. It's if Sina and Plan C, I'm sure they've come on your show and they've talked about the quantile regression.
Yep.
We have this nice rainbow looking chart. There's a couple different ways that they're regressing the top line and the bottom line, using exponential fit on the top line and everything. But the point is, it's a smooth based on different percentiles at a different time. So I also do that. But since the beginning, since I'm kind of just a basic, Americans like to get to one number typically. So when I talk about this stuff, I try to keep it to some multiples above and over the power curve. So I'd make my rainbows with multiples. The beauty is that I can stick to the same multiple based on the curve, but the disadvantage is as I evolve it over time to stick to the same multiple, I don't get a beautiful rainbow. Like it's a little bit lumpier, you see? So it's obviously, you see here, we're ramping up way high over the all-time trend is black, right? But if you can imagine what the power curve looked in 2010, 2011, it's in the middle of this rainbow. It's way higher. So that's how I do it. And then, like I said, if you stop calculating Bitcoin's power curve here, somewhere end of 2016, it's damn near a perfect rainbow, right? I'm still evolving it. You see the changes, but that's how I do it. It's a little bit different, but it's very similar to what Plan C and CN are doing with their power regression. So anyway, I have a rainbow here, different percentiles you can see in the tooltip, but notice how the multiples stay the same always, okay? So brass tacks, very rough days for Bitcoin into the 10th percentile would be 0.3x the trend. Okay, so we see obviously here, we pierced that to the downside in the as they call the crypto winter in the 2014 days. We pierced it. Actually, we didn't pierce the 10% in 2019. We almost pierced it with the FTX puking in 2022. So that's like extremes. And then the 98th percentile, you can see we've gone above it every cycle. So this is basically how I look at it. And now we're right in the middle of the rainbow. If you look at here, let's say the 3rd and the 7th percentile is kind of just normal middle of the range. So that is 0.5x the trend, so half the trend, or up to 7, you're at like 1.1x the trend. Okay, so the trend is 109,000 roughly on this day. Sorry, the price was. I need to put the trend on now. So 105,000 was the trend, roughly around the start of July. A half of it, obviously, which would be really, I think, low. That'd be a $50,000 Bitcoin. We're well above that. But we're getting now to the point, to the 7 or 8 number there, which is the 70th or the 80th percentile, which is between 1 to 1.5x the trend. Okay, so again, we know the trend is about 105,000. So there you see, a little bit elevated level in my view would be 116,000 to 150,000. I do not believe, based on my numbers, my analysis, that is anywhere near the top. Like I said, I believe we're going to swing. I believe the pendulum, extends to the other side. So I believe we're going to go up again over this number 9, which is the 90th percentile. So if I pull back to my other chart, this is only the top 9 now. And this is where it gets sort of fun. You can see it. So it's the same rainbow effect, but this is now above only the 90th. So we have the 2017 stayed above for, I also have this, which is the days. Basically, bottom line is we got 3 months. If it happens, in my opinion, I don't see any reason why the data would change this. We have 3 to 4 months where we go into FOMO silly season territory. I think it will happen again. I don't know exactly when, and I don't know exactly how long, but generally the past has been 3 to 4 months. Generally, it's been at the end of the 4-year cycle, which would portend the end of this year. So if we go out, let's say to December 2025, the trend at the time will be 125,000. So the trend, by the way, it's important to point out, the trend at the moment grows $100 a day. So that's, it's a great thing for Bitcoin. It's a great power trend. So the trend will be about 125,000 at the end of 2025. If we go to prior sort of highs, the all-time, which is like probably never going to happen again, it happened back in 2011, 7.8x. That's not going to happen. So this highest band is gone. I think the 99th is gone. I think the 98th is gone. But something basically here now. And if I go back, you can see the history. Easily did that in 2017. Easily did that in 2013. And in 2022, we mostly did it. But you can see, based on my analysis, based on the way that I plot this rainbow, it's damper, right? It's cooler than 2020, 2017, and obviously 2021 was confusing for a lot of people because we had the double top, and it came earlier, and there was meme stock trading and all the rest. So past is not always prologue, but assuming this little band of rainbow, assuming the end of 2025, I would say my target is 2x the trend. That means $250,000 to 3x the trend, which is 375 even seems a little bit high, but let's just say 250 to 350,000. It's a wide target, but based on the multiples, based on the trend, that's what I'm reading at the end of this year into the start of next year.
In previous cycles, we've seen bigger moves, but you needed less money to push the price, right? So nowadays, to go to $1 million, you need an injection of capital, which is insane. Like the market cap is going to go so high. Like gold is 22 trillion. And I believe, I don't know if you agree with me, but gold is going to grow. Bitcoin is going to close the gap. Gold is going to go up anyway. So where the money are coming from? Okay, someday
that's a good point. That's a good point. Gold will grow.
At the end of the day, it's going to be a race. The gap is going to shorten, but there's going to be a growth for gold anyway. So once we get to 20 trillion, well, then that's a 10x from now. Are we going to see it? 100% yes. This cycle, I don't think so. 250, 280, 300, 340, those numbers are so there. Many people have been negative, saying, oh, the top is in, we've gone, that's it, we're going to correct now, there is a big crash happening. Retail doesn't even care at all. If you look into the Google searches for Bitcoin, maybe the institutions are involved, maybe different players are involved. You can label in so many different ways, but I still believe we are missing that phase, which is going to be FOMO and people going, oh my God, we're going up forever, $1 billion. The whole thing makes sense to me as well. And I also think, like you said, super well, we will actually see a correction. The pendulum is going to swing on the other side, right? And this is what people are going to call the $9,000 CME gap. There's going to be insane on the other hand, which we will never see a $9,000 Bitcoin, I don't think. So I think we have to experience all the euphoria coming in. And yeah, the numbers you said, I actually like them. They make a lot of sense to me.
You put a lot of context as well to the situation. I think as well, which we haven't talked about, and I have some of these figures. I need to actually improve them. But you look at volume of retail, spot in particular, it's down compared to prior cycles. Obviously, institutional is supplementing that. And I think very much willingly so. I've heard plenty of older Bitcoiners say, you know what, I'm done with the keys. I can hold Bitcoin now in a tax reserved or tax deferred retirement account with an ETF. I'm just going to do it. Some people do that, and I'm not saying that's the best way to do it. I much more recommend multi-sig, multi-jurisdiction. That's what I do. Look, I'm on the border of Russia, and I never know. I don't want to do anything. I don't want to have to scramble if we have to run somewhere with my family, but I also don't want to leave my keys with the custodian. So I tell people it's kind of my own $5 wrench protection. I mean, I have my keys in multi-sig, multi-jurisdiction, fully redundant in many places, and that's how it is. So Bitcoin's an amazing thing. That's like, this is part of the onions, the layers of that we can go down the rabbit hole. But what you said about institutional taking over, I think, is a very real thing of this story. So that will play a part. But I still think the trend holds. I mentioned already, this is kind of my full thesis, basically, is it's kind of the two core components of my research. You have the money supply, central bank money supply, and gold, which we haven't fully talked about. But historical based money, present based money, Bitcoin, it's all money. That's how I'm viewing this. But then we have the power curve, which is network growth, brass tacks to explain the power curve my way, I would say. I mean, Giovanni has his way. Everybody can explain it how they want. You have to find this. You can't easily find this calculation, unfortunately. But if you model it, basically what Bitcoin does is every 12.7% of the life of Bitcoin, the price doubles. So that's how I view adoption. Okay, so we're at about 6,000 days of Bitcoin at the moment. 6,000 days since January 3rd, 2009, a little bit over that. So 770 days from now, I expect, and not only I expect, this is what the trend says, the Bitcoin price will double. Bitcoin adoption will double. So with that number, with power growth, that is a constant number. But what it represents is proportional network growth, which makes sense. And a lot of networks exhibit these characteristics, like the internet itself. You can read Jeffrey West's Scale. That's a very good book. Talks about a lot of stuff like this. But with Bitcoin, if you want to just get to one number, Americans like to get to one number if there's Americans listening. Bitcoin is not constant growth, it's power growth. And so for every 12.7% increase in the life of Bitcoin, the price will double. But that, as we continue the cycle, the next doubling after 2 years, basically, after 750 days, it's going to be a little bit longer. 12.7% is a little bit longer from that new base. So that's how it works. That's what the power curve means. Bottom line, you put these two theses together. This is sort of my ultimate chart. This line is world basic money. I also call it like TradFi based money. It's available gold and silver. And this is market cap numbers by my research. Available gold and silver plus the unbacked monetary base that I just talked about. Why unbacked? Because the monetary base, this is asset and liabilities. The monetary base is a liability for central banks. Central banks still hold $4 trillion worth of gold, to your point about gold increasing. Still hold $4 trillion. It's a lot of money in gold. And they actually hold $50 billion worth of Bitcoin, governments worldwide, 500,000 Bitcoin. So at the moment, we need to separate these things out. So I just want to count unbacked fiat money to make one number. Let's take out the gold, take out the Bitcoin reserves, and then let's add in the available gold, available silver, which includes central bank reserves, but it's a different number now. You'll get to this figure. All right. It's clearly exponential growth. It's a straight line on log scale. At the moment, it's $43 trillion, right? 40, 44, 43. You see the big bump here from COVID. It's the same thing. But now this number includes gold. It includes silver. So it's all. So this is, instead of that 26.2 trillion, we're at 43 trillion. And then I start extending out. Very simple, just a trend line. Let's put Bitcoin now together with it. Notice, by the way, how this line, which had a pretty decent slope, becomes almost flat. The growth of this TradFi, which is the green, TradFi-based money, which is central bank money, gold and silver. In dollar terms, if you blend it all together, it's something like 7.5% per year, constant. Bitcoin grows in power, 12.7% for every, it doubles every 12.7% extra in the life of Bitcoin. That's what this power curve represents. So they are not, it's not a straight line. It's interesting. But you can still do the calculation. You can put your own, I have my Bitcoin dominance here. And right now, goes back to what I was saying before. I think 95% of the Bitcoin price action is due to the power curve itself, adoption itself. 5% is due to TradFi and the rest of the world and all the stuff we've been talking about. But that's, you just model it out. This is not, it's really not rocket science. I'm trying to put it in the best, hopefully simple explanation for people. You model it out. And I think in about 20 years, the start of 2043 will match. Bitcoin will match TradFi money. And that number is, interestingly, about $150 trillion. So it's about to this number that a lot of people think today with broad money and stuff, which is not base money. But it's a completely different thing on a completely different time scale because, of course, we're not going to $1 million for Bitcoin tomorrow. We're going to evolve on the same trend that we've been evolving on. And that's here. I can throw a wrench in this. I don't know if you want to do it, but there's challenges to this model, which it's more philosophical. It has to do about the market and everything, but I can go through it if you want.
Yeah, let's do it.
We got 100 years here, right? I'm going out to the end of the century. You notice that when you plot power and exponential, right? So Bitcoin is power. The rest of the world is always an exponential. They're not parallel, right? They're not parallel. They don't grow in the same way. We can see this. This is how it works. But obviously, if you have basic understanding of like geometry, if this is curving and it goes up once, it's also going to go back down, isn't it? Because you can see it's not going to just continue up forever. It's actually a curve back. So it actually curved back below this exponential fiat money at some point in time. I'm not exactly sure philosophically what this means, because although the world runs in a very dirty, messy, compound growth fashion, exponential growth fashion, and Bitcoin's going to fix a lot of that. If you actually measure it under this very imperfect, but it still is a dollar-denominated system, Bitcoin doesn't rise forever. In about it's another 100 years. I can't remember exactly. You can see the dominance here. Notice how we peak out. We sort of crest here at about 540%, and then we start going down. Now, I know this is philosophical. We all love Bitcoin. It's going to be better than anything else. It's a question that has to do with, purchasing power, the value of money. It has to do with contracts. I'm not exactly sure how to describe it, but what I would say is probably one of two things needs to happen here. Either one, TradFi, we become on such a Bitcoin standard, a SAT system, but basically TradFi, which is always compound exponential and eventually breaks, right? So it's always broken in the past. Currency systems explode, empires explode, whatever. TradFi will need to bend to Bitcoin. That will be the Bitcoin story. That means TradFi turns into a power curve, or Bitcoin bends to TradFi. It means Bitcoin turns into an exponential curve. It's a rhetorical question. I'm not saying I have an answer. I'm not saying I fully have the thesis developed, but you can graph this thing a little bit different way. So here's if you look at the right-hand side now, this is the growth of this TradFi curve. All right. If you accept this as our sort of base money curve, it grows to 7.3% per year in dollar terms, and it's constant. Right. You draw it on log scale, it's a straight line. And if you look at the percentage, it's constant. It's just, it's math. It's 7.3% per year. Bitcoin is power, so it declines, and it actually declines very rapidly at the beginning. So Bitcoin, back in the day, right, when I was first figuring out about it, but didn't take the flyer, unfortunately, it was growing at thousands of percent a year, the network. Now it's at the pace where it's growing at 45% per year. It's still faster than anything in TradFi world, and it's on a model. Like, this is unbelievably fast. But it does decline. If we accept the power curve, then it will decline. At the point where it gets below TradFi, it's at 7% per year, this dominance, the point where it gets lower is 543%. The dominance will decline. The growth of the Bitcoin network is now slower than the growth of monetary assets. Yeah, monetary assets in dollar terms. And look, I know this is like super theoretical. We're looking 100 years out. A lot of things can happen. But I do think one of two things needs to happen. It's not a problem if, say, stocks, bonds, it's not a problem. Like, not everything needs to be completely, well, this comes back to the question, really. If we're on a SAT standard and everything is base money Bitcoin, or we have layers of base money Bitcoin, there's going to be different growth models for certain things, right? Like, just like Apple right now is more valuable than Bitcoin, it's possible that Apple could still be more valuable than Bitcoin in the future. And if there's only 20 million Bitcoin, what does it mean? It's not a problem if, we have certain governments can still borrow in Bitcoin, all the rest. But there are certificates, or there will be ideas of something that's similar to M3 money now, basically deposits on Bitcoin. I think that's still going to be the case. If it is the case, then actually it looks like Bitcoin might move more exponential. But if it's not the case, and if it's somehow a Bitcoin standard takes over the world and everybody moves on to Bitcoin, then TradFi needs to move in power. But if TradFi moves in power, you can't have fixed loan contracts. Because how would you have a fixed loan contract if you would actually be paying too much? Like, if you expect Bitcoin to only be, in 2045, Bitcoin's going to give you 17% over the next 12 months, right? But then the loan comes due in 2050, and then Bitcoin's only increasing 15%, right? Like, you'd have to have a slightly less interest each year on your loan contract, which is totally doable. All I'm saying is, this is like a paradigm shift, mind-bending idea that I'm sort of trying to explore at the very moment that we're talking. Is that I don't exactly know which system will win. I mean, look, government's got a lot of power. Governments have the guns. They make the laws. Some people say it's a good system. Some people don't. Democracy, whatever. Yeah. There's a lot of question marks. And so this is the sort of the interesting thing that I'm exploring. If you see this downward sloping line, don't think it means like I'm bearish for Bitcoin or anything. It just means Bitcoin is getting more stable, but it's actually going to get more stable to the point where it's lower at some point than the growth of the TradFi system. So it's an interesting philosophical question as we get out there.
Nothing is forever. Like, the sun is not forever, right? Like, time is such an interesting concept, and I don't think Bitcoin is going to go forever. At some point, something else is going to come in and is going to build on top of or replace it, as much as everything else has happened to us, right? To civilization. We used to have shells, and then we have gone into gold, and then now into digital. Maybe we won't even be on this planet.
Yeah.
It's such an interesting topic. But what we do know is, for the time we're going to live, which is hopefully another 50 to 70 or even 80 years, we'll be okay.
Yep.
Right?
Yep. Yeah. No, I mean, I'm always happy to pour cold water on my own arguments, though I think it's undeniable Bitcoin's growing in this way that networks grow. It's not constant. And so exponential growth is actually more powerful than power growth. It's constant growth. That's that straight line. And even if it's a low growth rate, which it is right now, I mean, relatively speaking, compared to Bitcoin, Bitcoin grows at 45% per year at the moment, although declining. TradFi money, including gold, even with gold's big run up at the moment, and even with all that monetary base growth, is still, if you blend it all together, you're at something like 7.5%. Something interesting will happen there. And I'm not exactly sure how to describe it. It has to do with, singularities and Bitcoin standards and all the rest. But I'm working on it.
Whenever Bitcoin is going to be to $10 million, the purchasing power of $10 million is going to give you so much less than what you can today, right? So there is also that to consider.
Precisely.
Maybe this video is going to be seen in 200 years from now and saying, oh, Matthew was right.
I would love it. That would be nice.
That's for sure. But Matthew, man, it's been an absolute pleasure. We definitely have to do it again. I really enjoyed this. Has been honestly one of my favorite conversations I had so far on the show. So thank you so much. It's been great having you on the show.
Thank you, Maurizio. I really appreciate it. Great meeting you, and all the best.
Likewise. And guys, thank you so much for watching. We'll see you on the next one.